Boom. All right, family. So today, we're gonna be going over some smart money concept setups. Now, last night, if we remember, we went over smart money concepts. We went over literally just like the basics. So just to recap a little bit, so the reason why we actually trade smart money concepts is literally just because of the banks. Literally just because of the banks. Since the banks are the big market movers, since they literally have full control of the market, we want to trade like the people who control the market ultimately. Now, the reason why is because 96% of traders actually fail, and we want to be a part of that 4% of traders that don't. Smart money concepts, the steps to it. So we have 4 steps. 4 steps. The very first step we want to ask ourselves is, what is the trend? What is the trend? Step number 2 is going to be, where is the money? Step number 3 is going to be, where are the banks hiding? And step number 4 is our re-entry. So last night we went over steps 1 through 3. 1 through 3. So step 1, right when we look at the market, what's the flow of the market? Uptrend, downtrend. Ultimately, this is going to tell us what type of orders are we looking for. Are we looking for buys or sells? Number 2, where's the liquidity? Where's the money at? So liquidity, pretty much what liquidity is, it stands for money. It's retail traders stop losses. How to find liquidity? You can find liquidity at double tops, triple tops, double bottoms, triple bottoms. Also, you'll notice there's liquidity at equal lows and equal highs. That's what double tops and triple bottoms are. Equal lows, equal highs. And every single low and every single high will have liquidity. Every single one. So yeah, so our step number 2, we are looking for liquidity. Now, step number 3, where are the banks hiding? We're playing peekaboo with the banks. We have 3 different candlestick patterns that we look for. The first one is the institutional / stop hunt / fake out. For our sell, what it looks like, it's going to, we want price to come up and create some equal highs. We want price to come up and create some equal highs, and then to push up and break those equal highs. We want price to push up and break those equal highs. Once price breaks those equal highs and then pushes extremely back down, we know the banks are in the game. We know the banks are in the game. What we're going to do, we're going to mark out the body of that first buy to sell candle and the 50%. And I'm gonna explain this more. I'm gonna explain it more in detail with step number 4. But we mark that out, and that's our zone. This yellow box, this is our zone. This is where the banks are actually hiding, where the yellow box is. So now that we know the banks are actually hiding here, that's where we want to enter. And we're going to be going over all of these over the next couple of days. But today, it's purely going to be strictly on the institutional / stop hunt, because it's my ideal setup. It's the setup that I'm always looking for. Anytime I get on, if like this is like the very first thing I'm looking for. And if I don't see it, it's okay, because we're not going to force anything. We're not always going to have the perfect markup or the perfect trading week or whatever. But when I do see it, best believe I'm going to take advantage of it. So today, institutional. Boom. My ideal smart money concept setup. I know it looks crazy, family. I know it looks crazy. But we're gonna start it off from over here. So remember, like I said, the institutional we're looking for equal highs. So step number one here, I'll actually write out some steps. I wasn't going to. Step one, step one, what is the trend? Obviously, trend. What is the trend? Obviously right here we can't tell, but if we were to be looking for sells, this is going to be an opportunity to sell. We're going to want this to be a downtrend. We're going to want this to be a downtrend, and then so we want it to be something like this. A downtrend, create equal highs, boom, perfect. So step number one, we want to see the trend. Step number two, we're looking for liquidity. I'm just going to put money signs. We're looking for liquidity. So step number two, we could see we had the downtrend and liquidity started building up. How do we know liquidity started building up? Double tops, triple bottoms, equal highs or equal lows. We have some equal highs right here. So that means liquidity is actually starting to build up, family. So with the liquidity building up right there, we know that there's actually money on top of up. There's a bunch of stop losses. There's a bunch of money on top right here. So now with that being said, knowing that we do have money, what we're waiting for the banks to enter the game. So now the indication that banks are actually in the game are the banks buying to sell. It's this actual institutional candlestick. So step number three, we're looking for the banks. Where are the banks? So what I mean by where are the banks, we're looking for our candlestick patterns. Where are the banks? We're looking for our candlestick patterns. Now we have three candlestick patterns, 3 sell candlestick patterns, 3 buy candlestick patterns, but we're only looking at the institutional today. So step 3, we're looking for our candlestick patterns, which is the buy to sell in this example. So we have the banks that they buy to sell. They captured that money. Perfect. That's all we need to know so far. That's all we see. Don't worry about any of this right now. Don't worry about any of this right now. All we saw was that we got the institution. Now, step 4, once we have the institutional move, what we're going to do, we're going to mark out our POIs. Mark out our POIs. So our first POI that we're going to do is going to be the body of the, so it's going to be the body of the first move. So this one was the first bank move. So the banks decided to buy to sell. So we're going to put it at the body of the first buy. So the body of first bank move. Okay, so step number 4, we're looking for our point of entry. One point of entry is going to be the body of our first bank move. Our second point of entry will be our 50% of that same candle. So now what I mean by that, family, what I mean by that is right here. So this is the candlestick pattern that we're talking about right now. Now, when price creates, what's up, BZ? What's up, BZ? All right. So step one, the trend. We had a downtrend. Perfect. We know that we're going to be looking for sales. Step two, where's the money at? Where's the money? Where's the liquidity? We can see liquidity started to be built right here because we have some equal highs. We have equal highs. Now, equal highs, liquidity, the banks are going to want to take that out. So we already know that off the top of our heads, the banks want to take out liquidity. So what we're doing for step three, we're looking for where the banks are hiding. We have to wait for the banks to make their move. Their move is for like my ideal setup. The move that we're looking for is the banks to buy, to sell. The banks to buy, take all that liquidity, to sell. We also call this a stop hunt. For the stop hunt, it looks a little something like this. So you'll see it's literally going to be exactly like the same thing. So we're waiting for it. Do something like this. Double top. Boom. Boom. So this is what our ideal stop hunt looks like. So as you can see right here, we have our double top. We have our push up. That push up. We have that break back down. That break back down. Back into the zone. And typically we're going to have this move right here. Price drop back down and come back to retest the candle. So now, just before I get into that, I just want to catch everybody up. So step one, trend. Step two, money. Step three, where the banks are hiding. Now step four, our point of entry. So our first point of entry is going to be the body of the first bank move. So as you guys already know, the banks are buying to sell right here. So where the body of our first bank move is right here. If there was a wick, let's say there was a wick right here. It don't matter. So let's say there's a wick, it's a little cricket. Boom. We have our body right here. We're going to put our first point of entry. So our blue line, our blue dotted line right here is going to be at the body of the candle. That's where we're going to put our first point of entry. Our second point of entry, what we're going to do, we're going to pull out the Fibonacci. Pull out Fibonacci, and we'll drag Fibonacci from the body, from the bottom of the body to the top of the body. What that does, that measures the candlestick. That measures the candlestick for us. So then what you're going to notice is you're going to have a level right there that's 0.5. That's halfway. So that's a 50% of the candle. Then you're going to drop a line right there, a horizontal line right there. So that's our second entry. So we have two entries. Now with these entries, you can do one of two things. You can either enter market execution, that's what ME stands for, entry one, ME, or you can enter a sell limit. We're going to be looking for sells. So far, we've marked out our point of entry. Our 2 point of entries is going to be the body of the buy to sell candle and the 50%. Perfect. So now let's say we wanted to enter this market execution. We didn't want to do a sell limit. Perfect. Before, or no. Okay. So now we let price do its thing. All we're waiting for is for price to come back and touch our entries. All it has to touch is the actual body of the candle, but sometimes you'll see it come and test the 50% too. So now what we're waiting for after we find our point of entries, Step 5, I wait for liquidity to build. I wait for money to build and get taken. Step 5, I wait for money to build up and to get taken. So price will drop a little bit. It'll create a little bit of liquidity, and then the liquidity will take it. Price will take liquidity. That's step 5. Step 6, sorry. This is actually going to be step 6, family. Just making sure this is kind of like real kind of tuned in for you guys. So like if you guys are just like really don't know what you guys are doing, you guys can come straight back to these notes like, okay, step 1, step 2, step 3, and really follow it for like someone not knowing anything. But step 5, we're going to either put sell limits on POI or wait for market execution. That's step 5. So step 5, we're going to wait for or we're going to put sell limits on our POI or wait for market execution. Now step 6, we're going to wait for money to build up and to get taken, aka consolidation right here, to get taken and for price to start heading back up to your entry. Now step 7, I would like so number 7, we're going to look for the banks again, family. Number 7, we are actually going to look for the banks again. So let's say price came up and we were watching this market execution, and price came up, we're watching this market execution, and it gave us another institutional. It literally came up to our area, it gave us an institutional and started running away. What we're going to do, family, is do the same exact thing we did right here. But for this example, the difference is when we see our institutional, we mark out our POIs. So the dark blue lines are our new POIs. There are new POIs. So we have it at the body of the last push up before the push down, and then the 50%. Now, with our re-entry, this is our late entry, our second entry. With these, this is where I'm really going to use the sell limit. Now, the reason why is because the first stop loss that we're going to use, it's going to be pretty small. It's going to be pretty small because we're literally only going to be playing the candle. We're not going to have our stop loss above the high. We're not going to have our stop loss below the low. It's literally nothing like that. We're literally only playing the candle, family. So this is where you could really get like a 10 pip stop loss. Now, where we get that re-entry, the reason why I love the re-entry and why I'm immediately putting sell limits on it is because for the re-entry, when price comes up, typically it's going to wick it and your stop loss is going to be extremely small, to where we have like a 3 pip stop loss, which is extremely insane. How many of us would really go crazy and would really benefit from having a 2 to 3 pip stop loss? A 2 to 3 pip stop loss. And think about it, your take profit is the same as this trade right here. So if this was just a 10 pip stop loss in order to gain, let's say like 40 pips, Now you're at a 2 to 3 pip stop loss in order to gain maybe like 30, 40 pips plus or minus. That would completely change your trading journey, just because one, risk management, obviously like your lot size has a lot to do with that, but then two, just your risk to reward ratio, period. If we have a 4 to 1 risk to reward ratio, that means we could lose 4 trades and win 1 and break even. And what are the odds, especially with like Gold Cup, with Harmonic Scanner, with all our educators, the 150 plus educators, Go Live educators, these 6 to 7 figure educators that we actually have, that we're going to lose 4 trades in a row if you're actually plugging in with these educators? Because you could lose 4 trades in a row just trying to assume that you're a professional. But yeah, so step number 7, we're looking for our reentry. Step number 7, we're looking for our reentry. So price came up. We had our institutional, our buy to sell, and we did exactly what we did before. We found our POIs. We found where the banks are hiding. And we know where the banks are hiding. This is our sell zone. So if price pushes down, price is probably going to consolidate. We're going to wait for price to create some liquidity and then capture it. And wait for price to create some liquidity and then capture it. Once price captures it, it's going, we're literally, all we're waiting for, we're going to set a sell limit. So for these, I'm going to delete ME. I'm just going to leave sell L. So this is where I'm putting my sell limit, family. If I don't put a sell limit right here, I'm for sure putting it on my reentry. If the reason why we have a reentry, family, keep in mind, we're not just like not entering right here. It's just, what if you miss it? A lot of times we'll hop on, we'll see this, we'll have it marked up, we'll go, boom, we'll have an alert or something, or because we want to enter market execution, we get our alert, we hop on our computer. By the time we hopped on our computer, price is then already pushed down here. It's like, dang, I missed the move. No, you're good. Don't even worry about it. We have our re-entry technique. So this is the benefit of our re-entry technique, family. Does this make sense? Has this made sense to you guys?
Hey Joe.
What's up, family?
Have you told them why, or basically why the re-entry is good? Because the candle is not being tested.
What?
Because you remember how Ziggy said it? But basically, once the institutional is given and it goes in the opposite direction in the way we want it to, the re-entry is available because the candle hasn't got tested.
Yeah, so that's why we're waiting for, that's why, so right here, we get our institutional, price drops, and it doesn't matter how far price drops. This is good, and because we're waiting for liquidity to build up, we're waiting for price to snatch that liquidity and for price to come back up and retest our candle. So this will be good until price comes back and retest it. Is that what you're saying, family?
Yeah.
Got you, family. Got you. So yeah. And then same thing for right here. So like for our reentry, let's say price push down, this candlestick is going to be good for our reentry for however long. Obviously once it gets past a certain point, you want to start looking at certain stuff down there. But let's say that it goes a little low, you could still have this marked up, have an alert on it, because a lot of times you'll be like, dang, that just went far. It's probably like out of there. And then you'll go do something, come back a couple hours later, boom, it's literally at your line. You could have entered, but you missed out because you didn't enter a sell limit because you thought it was way too far. Me and Rahad have both missed out on trades like that, to where it literally, like, to where it barely, let's say our blue line right here was our entry. Price would come and literally barely wick it. And then we would look and price would be all the way down here by the time we actually look. Like, what the hell? But yeah, does this make sense, family? Does this make sense? Because thanks for pointing that out. Got you. Got you. Of course, of course, of course. Perfect, perfect. I'm glad this is making sense. So yeah, so this is the ideal setup that we look for. These are our steps right here. Step 4, look for banks again. Re-entry. COI. Point of interest. Point of interest. So at step 7, once we're looking for our banks for POI, all we're doing, we're starting from step 4 and then going again. That's all we're doing. Going from step 4 and going again. So that's literally my ideal setup, family. We have 10 minutes left on this call. So what I'm going to do, Rahad, do you want to help me look for some setups? Like some setups that there was inside the week and all that?
Sure.
Not you. Got you. So you can share your screen, family. Do you want to show that GA we missed earlier? You know what I'm talking about? I said NAS 100.
My bad. So this is literally what Joe is talking about, where he says it literally wicks in and falls. Literally see it barely touch where our point of interest is at. So basically, starting from the beginning, like how Joe was already presenting, GA has been in a big downtrend, and it actually just, when I marked up, it actually took some money up here. So it was already on its way down. Then we see these even highs right here. Peaking. And you literally see the banks take the money all the way up here. So they took everybody's stop loss that was right here. And then they finally they push down, and then the re-entry. We literally got our sell limit. Literally, mine was 2 pips, real, like 3 or 2 pips away from this.
Yeah, man. I was low key sick, but I wasn't trying to even focus on it.
I know I wasn't really tripping either, but it's just crazy how it also had take profit before the end of the day, and this got called out this morning. And then you see that XPX broke up high, right? It broke the all-time.
My bad, family. I couldn't hear you. My AirPods connected, and I took them out.
Oh, for sure. I was just saying how the XPX broke the all-time.
Oh, snap.
Yeah, I seen it earlier today.
So how high did it go? Did it go to 3,400?
Yup.
Ooh. That's so hungry. It might push down, real.
Big time down, because it's right there at the time high. But you remember gold. Gold was going for a minute.
Yeah, but that was a different story. We got stimulus talks.
That we gotta be on that. Gold is consolidated somewhere, making some more money.
Creating some liquidity.
Got what? Where it showed a lot. This is that was the gold. Y'all caught that they got stop hunt. Got liquidity right here. Took it. It's right back up.
So that's the stop hunt. So
Yeah.
What we're looking for is for price to actually push up, but then we even have some smart money concepts over up there. So we have our alert right there, but then if you keep looking up, we might even have some imbalance. Do you see that imbalance?
Yeah.
So we could look at both of those areas for points of entry or points of interest.
If we scale down, we might be able to get it. And that's a long candle. Dang. It's not even really giving us nothing to mark up on.
It's all good.
I know it's just crazy how how this imbalance played out.
Family, could you type some names on the screen for me?
Some names on the screen.
Yeah.
Want to just take control?
You can just press the text thing.
Where would that be at?
The T.
The
T.
Oh.
All right. So the first name. So these are going to be some Go Live educators, family. Some Go Live educators that actually teach smart money concepts. The first name is going to be Rock Coomer, ROC. And ROK, my fault, ROK. And then space KUMER. This is gonna be our first Go Live educator that trades with smart money concepts. The next one is gonna be Mike Navarrete or something like that. Navarrete, Mike Navar.
That sounds like some difficult.
NAV. Here, it is spelled NAVARRETE, and it's not a B, it's a V. V as volleyball. Now also we have Jordan Hogan. And above Rock Coomer, can you type in Abel Melendez and then put like a dash next to it and put like Jiggy Zoe, you feel me? His Jiggy Zoe videos.
Mendez, right?
It's okay. Yeah, Melendez. Melendez. M-E-L. M-E-L. Or, yeah, something like that. M-E-L-E, Melendez. Plus or minus. We can all figure it out. But these are some Go Live educators that actually they speak the smart money language. They teach you how to trade with banks. And also Luke, but we only have a minute left, family. So it was a blessing to be on here with y'all. I appreciate y'all for tapping in. We went over smart money concepts entries, how to get our re-entries, how to get those small 3-pip stop losses. Now let's practice this. I hope we all took some notes. Because once you have the notes, it's easy. All you gotta do is look at the notes and literally look back and forth at your chart from your notes. But yeah, family, we're hot. If you want to hop on after this real quick to get a little session in, you already know. Let's get it going, family. Have a blessed night. And later, y'all.